what is the number one or two things that people today can do to minimize their tax on all these different types of transactions that we're talking about?
Well, that is, I get that question all the time.
That's everyone wants to know. How do I
Especially
minimize
people
it?
that bought XRP all want to know. They got all their money in one coin and it's going up. Well, it breaks down into a couple categories. What's in the law, what's outside the law. Not necessarily, there's some of the outside the law is legal, some of it's not legal. Inside the law, pretty much long-term capital gains is what the government wants you to do. That really reduces your taxes significantly, 40% in most cases. The second thing, then you start to go outside of what the law prescribes. And typically this is residence based. So, move out of a state like North Carolina that's going to tax your income, or California or New York. There's 9 states that have no tax. So if you're in a position where you can move to one of those states, at least you eliminate the state tax of your capital gains. Still the federal, but you don't have the overlay of the state. The third option there that's in the legal category is relocating to Puerto Rico. They have the Act 20 tax incentives. It's a very complex set of residency rules, but basically the gains that you experience after you arrive in Puerto Rico can be tax-free if you qualify for the Act 20, Act 22 rules. I will say this though, I recommend that only if you've already realized $1 million or $1.5 million in gains, because there's a lot of cost in doing this, and that cost pulls away from your gains. And the real estate in Puerto Rico has gotten really expensive. A lot of rich people are moving there and the prices are skyrocketing. So, there's a lot of gotchas on that. It's not just, don't think you can fly to Puerto Rico and make $1 million. So those are the major rules. Now, when you get into sophisticated things, then you can say like you stake your coins and live off the staking income for years. Put your assets, that would be pretty much a bigger one. It's like, instead of selling, why don't you go to, if you've made a lot of money, stake it and start to generate an ongoing income stream, and don't sell the core assets. Let them grow, let them appreciate. I mean, most of us think that, Bitcoin is going to hit 6-digit numbers. Ethereum, they talk about 6-digit numbers, not this year, maybe the year after that. If that's your belief, well, let it sit, let it ride, and live off the interest. That's what the wealthy people do.
I like that. That's kind of what has been going around on Twitter ever since, Biden came out and was talking about his high tax rate. Everyone's like, well, just hold the assets forever, right? Or take a loan out against it, right? Nobody
Right.
sell.
Let's talk Biden. All right. So today it's April 27th. Supposedly he's going to release this week his tax plan, but they've been talking about this, increase in the capital gains rate, increase in the business tax. They've been talking about this before they've even announced the details. Now, this is for all your listeners. If people are scared about this. If we haven't learned anything in the last 4 years from Donald Trump, it's that you never believe anything he says. Only watch what he does. He's written books on negotiation. He always came out with an outrageous position up front that got people angry. And he held to that position, even though people spent all their time arguing about it. He never cared about that position. He cared about this position over here. This is what he was leveraging for. And he kept hammering this one to get concession over here. The fact that the Biden administration is, or in the news media, is hyping this, increase in the capital gains is how we call it, the tail wags the dog strategy. All right. So, there is something that's going to come out in that plan. It's something that's going to be money under the table. It's going to, it's the larder. Find that. Ignore the capital gains thing. That's a distraction. That's a negotiation point. It's also a massive media distraction. Look at what they're trying to get you to swallow, hook, line, and sinker. That's where the issue is. Forget this capital gains tax rate, and it won't bring in any money anyhow. I mean, first of all,
people are too smart. People are too smart.
What will happen if you jack the rate up real high? Well, people stop selling things. Is that good for the economy? No. And the smart people won't be bothered by that. They'll find the loophole. They'll say, well, let's put my assets in the name of a trust, and then I'll sell it from a trust. The wealthy people won't be bothered by that. It's the emerging middle upper class that are going to get burned by this sort of silliness. But mind you, these sorts of bills only get passed in a year where there's no elections. That'll be this year. They're going to do it typically like they did last time, 2017. It's going to be in November and December. If they're not talking that issue in November, December, then you know that bill's not going anywhere. When Trump got his tax law changed in 2017, that's the first time it had been changed in 41 years. All right. There are massive issues in the tax code, and they bundle it all together. And Biden does not have the authority to change the tax code. Tax code is made by Congress. There's a joint committee on taxation, House and Senate together. Cooler heads will prevail in all of this, rest assured.
Yeah, I agree. Everyone gets all worked up over everything very easily through the media. And at the end of the day, it's never as bad as, people think it's going to be, right?
Yep, absolutely.